Morning all, how are you all doing? Oh, I'm looking very yellow today. Is that just my eyeballs or am I looking very yellow? How are you doing? Morning, happy Friday. Morning, Christian. Oh my God, that's a difficult one to say. Zacharias, hopefully. Morning, Kennelly. Day Trader FX, John, Andres, Jamie, Jimmy, Virginia, Amy, Paolo, Baggy, how are we doing? Hope everybody made lots of money yesterday. Pretty good moves yesterday, wasn't it? Look normal to me, do I? I'm just yellow. Right. So, quick recap of yesterday first, just to go through the news, because there was quite a lot of news and quite a lot of movement yesterday. So someone just posted a picture of Greg Secker in Telegram. Worked out. You'll see exactly how I don't trade and put a hat on in front of a helicopter. Buy my course. Good one, Greg. And lovely use of the eye makeup. That's not too much today, is it? But anyway. Sorry. So, yeah, yesterday, a lot of movement on the indices. So just running through the news yesterday, we had the durable goods coming out as a big miss. Jobless claims came out down, which is positive. So there's your unemployment claims, which is positive. We had Harker speaking. If inflation comes down quicker, we may cut rates sooner. And in the same speech saying more Fed rate hikes are possible. Actually, that was Collins, but in the same basically breath, if you like, the Fed came out and said, we might cut rates quicker than expected. And then someone else comes out and says, we might put rates up. We weren't going to, but we're going to. So it basically cancels each other out, same as usual. So complete confusion out of the Fed yesterday. BRICS, more stuff about the BRICS deal that's going on, which, you know, doesn't really bother us at the moment until we know what's going on properly. China issues nationwide guidance on easing mortgage rules. We've had German GDP this morning. That came out as expected, so nothing new there. And there's nothing from Japan. So that's the main thing I was scanning through for Japan to see if there's any more news from them, and there wasn't. So today we have Epic Pen adverts flying all over the place. Sorry. Today we have at 9 o'clock we've got German IFO. That doesn't tend to do a lot. The market doesn't usually hang around for it, so we shouldn't have any disruption on the index open this morning with the DAX. But the main news this afternoon is University of Michigan and Powell. So the University of Michigan is very hit and miss. It doesn't tend to do a lot, but they do sometimes use it for movement. But the main things we've got today are Powell. So it's day 2 of Jackson Hole. So we've got Powell talking, we've got Lagarde speaking later, we've got Harker coming out later as well. We've got Ueda tomorrow, so that will be an interesting one for Monday to see what happens with the yen. I'm not here though, because I'm off next week, so you'll have to deal with that yourself. But yeah, that'd be interesting to hear what he says. So it's all talking heads this afternoon. This is the one the market is waiting for. So the market tanked yesterday. I don't think that was to do with BRICS. I think that was more of a precedent as to what Harker and Collins said yesterday about potential more increases in the interest rates and also faster cuts in the interest rates. So the market kind of had a little bit of a panic yesterday. But today, this afternoon, we're waiting for Powell. So this is the one today that we are waiting for. It's at 3 o'clock, half an hour after the New York Open. So we might have a really contracted New York Open this afternoon. We'll see what happens. But we also might have a bit more panic selling before he talks. So we'll see. So looking at the indices and everything, I banked 0.88 yesterday. So just under 1% banked. I'm on 6% for the month now, which is fantastic. I'm not trading next week, but I might be able to bank some more. But we'll see. But yeah, for a month like this, where it's been flat as a pancake, 6%, I'm happy. So that would do me for this month. Morning, AZ. So if we have a quick look at the indices before the market opens, as you can see on the DAX yesterday, we've still got this gap fill to do on the DAX, but these indices are under real pressure at the moment, a lot of pressure. We don't seem to be able to get any upside. The market is still very, very concerned about something. So we've still got that gap fill on DAX in play. And as you can see yesterday, we had that massive collapse. So the DAX came down, did the gap fill. I took the long and made money on the long before the reversal. But the gap fill then happened, and then New York completely collapsed the market. This morning, we've opened on the DAX with a gap, which is instantly filled. So immediate gap fill, immediate pressure again on the DAX. We might have a big collapse day today. Again, we'll see. So there's your low that we're looking for, which is last week's low. That's down at 154.68 roughly. US indices, as you can see, huge drop. Very, very odd price action on this yesterday. Look at this move to the upside and then utter collapse. I think we got 200 ADR on the S&P. Yeah, 200, just shy of 200 ADR on the S&P yesterday. Huge drop. And they are coming down again this morning. So markets down across the board, across the world, basically. So not happy. Hey, look at where we crashed into. That was a previous low I was watching. Look. Don't tell me support and resistance don't work. So there you go. So DAX this morning. We'll quickly get a look at the DAX. We got 42 seconds to go. So just go with momentum today. At the moment, momentum obviously is very down to start with. We've got these lows, which is yesterday's low, which we're at the moment. So if we break yesterday's low, it's basically a drop. And the drop potentially we're looking at is down to last week's low. So that is well within ADR, 3/4 of an ADR roughly-ish, something like that. And that is a previous monthly level as well. So we'll see where we go. If we go back up to the upside, chances of hitting yesterday's high at 175 ADR, probably not going to happen, is it? So I'd be very surprised if we got 175 ADR upside move. That would be a big ask, I think, today. So we'll see where we go. So there's your 15-minute pre-market. We've got no ADRs to look at. We've got a few RSIs, so we'll go through those in a minute. But let's whiz over to the DAX. So pre-market range not traded. No, looks like that terminal's frozen. Yeah, pre-market range is too tight. So not taking the pre-market today. So I will be taking the 5-minute ORB. It's just a bit tight. Although if you are taking this pre-market, you're probably going to do all right on this today. It looks like it's going. So there's your pre-market 15. Nice clean break long. Watch the pre-market highs if it does break, but it certainly looks like it's going along at the moment. Yesterday on the other indices, so DAX yesterday was a really nice, easy trade. So yesterday's ORB, the pre-market 15 was a nice clean break straight up to 2R target, and then it reversed back down, and I got out with a 1R on the second half. So that was a nice, quick, easy DAX trade. The S&P 500 yesterday was a nice, clean one as well. Obviously, because I wasn't streaming yesterday. So so that one broke to the downside. Look at that. That was my TP. So it hit that 2R level, bounced off of it 3 times and came back up and stopped me out for a $50 win or something stupid. So break even on the DAX, the S&P. Just about 2R though. I should have really taken it off manually, but I was too busy watching this boy drop. So I was in the NASDAQ on the pre-market. Yeah, so there's your pre-market drop. 2R target, 5R target. Could not have failed to absolutely kill that yesterday. I got out at 5R because that's my target. Yeah, so making 7R on an ORB within 15 minutes, most people would be happy with that. Look at what you could have had. But when would you ever expect it to do that? You know, it's just not not what you'd normally expect, is it? So we started to get some bullish price action on that flag break. And then it didn't even manage to get a flag. It just kept going. We had a little accumulation for 15 minutes. And then we finally got down there and settled for the evening. So yeah, that's a lovely ORB, but you could have had 10, 15R out of that yesterday. Obviously, you'd have to have held it. And the Dow yesterday, I didn't trade the Dow yesterday. It was a clean break off of the 5 and the 15. So the 15 pre-market was there. You broke to the upside beautifully. The 5, that was too tight a range though, so I didn't take it. The 5 was too big. Didn't take that. They both worked. So whichever way you went with every index yesterday, you cleaned up across the board with every ORB. It was absolutely fantastic day for ORBs. In fact, this week I'm 4 for 4 with ORBs. I think it's 22 grand on this week. So yeah, it's one of those weeks. So there's your DAX break long. So if you have taken the ORB pre-market, you are, depending if you're taking the 5 or the 15, you're not quite 1.5 hour yet. But not particularly huge movement this morning. But yeah, enough. So there's your 5-minute range going in. You've got 55 seconds left on this candle. Give me a sec. Okay. Morning, Peter. Morning, Jerry. Morning, Ismet. If I haven't said hello to you, I think I have already, haven't I? Sorry, I'm not with it this morning. Okay, so there's a 5-minute range in. So looking for a break of that 5-minute today. There's very little movement in this today. Doesn't seem to be particularly excited this morning, does it, the market? So we'll see where we go. But that was not a particularly violent open this morning. There's not a lot of volume coming through at all. But all indices seem to be breaking the same way this morning. It's got no legs at the minute. We might be waiting for the business climate report to come out at 9 o'clock. That's an hour away. I'd be very surprised if they're going to sit there for an hour. But the market is in shock after yesterday, so it could well be that that's what's going to happen. We'll wait and see. Morning, great. So just a quick recap of yesterday. So 0.8% yesterday banked. The main stuff banked yesterday was pound US dollar. Oh, sorry, let me just open the VPS. Just want to get that booting up. Sorry, bear with me 1 sec. One sec. Right, so I just want to get the VPS boot up because I want to look at what the set files have done this morning. So yeah, yesterday, pound US dollar. So got a drawdown control done on this one yesterday. This is the only drawdown control done yesterday. Everything else is profit. So one drawdown control done on that position there. There's 3 positions on this one at the moment. So one DD control done on the first position. So that's the first DD control done on this long out of those three. I think that is right, isn't it? No, it's 5. Sorry, on this one. No, sorry, this is the old. Yeah, sorry, no, this is not 3 positions. This is 5. So that was the first RSI extension. Second entry, third entry, fourth entry, fifth entry gone in this morning. So that's the drawdown control done now on the third position. So since we got into this, we've had obviously this drop and this multi-week sideways move, which the US dollar has suddenly powered up yesterday on to drop down to the new lows on that one. So drawdown control done on that one at the minute. Just firefighting this pound at the moment. We can't seem to get any legs. And obviously the US dollar's powered up basically yesterday on the talk of interest rate rises again. US dollar CAD, so I got that one banked on that yesterday, which has just gone back on this morning. So that one got taken off down there. We basically stuck in a range. So as I've said for the last couple of weeks, what I'm doing at the moment is basically just getting out of things when I've got a decent amount of profit and then adding them back on again and assuming that we're going to stay in this range bound state for another week or so. And then just keep rinsing, repeating, banking over and over again. So took that one off yesterday at these range lows in that propulsion gap. Added it back on this morning on the reversal alert. So we've just had a reversal alert on that one this morning on M5. There you go. So there was a reversal alert there, really, really tight one, look in there. And then it's just popped up, put a new high in, and that's the next reversal call. That's coming down fast this morning. They're undoing this US dollar move by the looks of things. Yeah, undoing the US dollar move. So we should get some positive move on the indices this morning. So yeah, US dollar CAD out of one there. Pound yen went flat. So the pound yen basically was a long. So I got out of all the shorts, as we know. So that was the initial position, and obviously got out all the shorts on Wednesday. Entered long because we were RSI extended, and took that RSI extension off in that propulsion gap yesterday. So just a nice quick push up into ADR pretty much, and got out of that one. Aussie dollar, US dollar, took one off of that as well. So same thing, 1, 2, 3, 4 positions on. Had one on there, pushed up, took it off, pushed down, added again. Yeah, so just the same thing, rinse and repeat. As long as we're going to stay in these range-bound moves, I'm just going to keep taking these off, basically, and banking them and waiting for the moves to start. So Aussie dollar, US dollar, not convinced about a long on this, but I'm not far away. I'm 150 ADR on this, so it's not in the best position at the moment, especially with what happened with the US dollar, but Powell might undo all this today, so we'll see what happens. But yeah, just waiting for a profit take on this move, basically, so waiting for that pullback to begin. And that's it, I think. That was yesterday, wasn't it? So that's all from yesterday. Quick look at the DAX. 17%. So this account was the one I just chucked 10 grand in here, basically, to see if I could double it in August. And to be honest, I haven't focused on it, have I? I haven't really looked at it much. But I've done 17% on it. So 15% increase. Better than nothing. But I was trying to find the DAX. There we are. So DAX broken long. Initial target is 2R. So watch this area here today for the upside for initial resistance. That's close to ADR as well, if we get a break. But it doesn't look like there's any volume at all in the market today. So I think it's going to be a slow one. So we'll keep coming back to that intermittently, but I'm not holding my breath on that this morning. So that's what I've got at the moment. Aussie US, Euro Yen, Pound US, US CAD, and US Yen. The only thing really that's getting not particularly worrying, but that is in drawdown is the Pound US, based on that US dollar collapse, or rather that US dollar rally that we had yesterday, which has dropped the Pound US dollar. So yeah, ADR, my average up there just above 125. So I need really a couple of days of rally. I need Powell basically to talk the dollar down this afternoon. We'll see. Right, let's have a look at ADRs first of all. 3, 4, fine. I'm doing multiple things at once, as usual. Okay. So ADRs today, there are none. We had lots of ADRs hit yesterday, obviously, as you'd expect with all those moves that went on. Weekly ranges, we'll have a quick look at these weeklies. Euro New Zealand, let's put the week start in. Where are we? Friday, Thursday, Wednesday, Tuesday. Tuesday, Wednesday, Thursday, Friday, yeah. So there's your weekly hit. So that weekly range was put in on Wednesday, and we've had that nice reversal off of that one. So that's played out. You've missed it. Pound New Zealand, or well, we didn't miss it because we looked at it on Wednesday, and if you took it on Wednesday, well done. Pound New Zealand, same thing. That's your weekly range. These are only just 100% ADRs or AWRs as they are, rather than weeklies. Sorry, rather than dailies. Sorry, I'm just adjusting something over here. Got a rather large futures trade on, which I'm over leveraged on, so I'm just watching it like a hawk. Pound New Zealand, that potentially looks like that W pattern is starting to go. So this is not a bad weekly reversal. We've put a double bottom in this morning on this one. I am expecting more strength on the pound. There's nothing on the New Zealand. So this is actually a pretty good looking long opportunity at the moment. If you look at where we are long term, this is a beautiful pullback for a long leg. This is a 38 retracement. Yeah, so there's your 38. So this is a lovely textbook shallow pullback. If we're going to go more pound strength, which we should do. We haven't got Bailey talking, obviously, unfortunately, at Jackson Hole. Let's have a quick look at. Yeah, it does finish on Sunday, doesn't it? Or Saturday, tomorrow. So we haven't got Bailey talking, unfortunately. We're waiting to hear from Bailey as to what's going to be happening moving forward with interest rates and things. So, but yeah, looks like a good W pattern reversal. So there's your initial reversal. That was the retest candle, but it's pushed down for a second leg. So there's your W pattern, basically. It may well play out. If it does play out, we'll be looking to challenge those highs. So good looking long opportunity there, and it is a bullish bias. And we've got the pound US dollar as well. Now, obviously that has collapsed down from the news and that massive rally that we had on the US yesterday. So this is begging for a mean reversion. If it does, I shall be taking one of these off in this propulsion gap. So looking for a 50% retracement. So look at the last moves we had. Big push down, 50%. Big push down, 78. Big push down. We'll be looking for at least a 50 on it, I reckon. So that propulsion gap there, 125 ADR to the upside is on target. We have also got news today that could do that for us. So we've got Powell speaking at 3:05. We've got University of Michigan at 3 o'clock. We've got Harker later on. If the ECB rallies the euro, the pound will get a kick off the back of the euro rally, which will obviously help this as well. So if we get the Fed talking the dollar down, that's going to help this rally up. And if we can get the Lagarde talking euro up, that's going to help the pound. No reason why we shouldn't be sitting up at 125 ADR today, which is this propulsion gap. So that's definitely on the cards today, and I'll take that off if we get there. Obviously, I can add it back on again. But we'll see what happens. So those are your weeklies. RSIs, there's a few to look at as well. Right, one sec. The DAX is still rallying. The reason I'm a little bit off focus is because I've got a long on the Dow. And I'm just watching this. I'm watching this. This is why I'm distracted. Yeah. So we've hit this level here, and I've just seen rejection, and I'm in here at about 1.5K. So I'm just watching this very closely because, first of all, I don't want to make more than 3K because I can't go over a consistency rule that I have. And also, obviously don't want it to completely drop. So I'm just watching this rejection at this level here because it looks like we're running into a bit of a brick wall here. Obviously, we know that we've had a massive sell-off on this thing yesterday. So there's a hell of a lot of sellers on board at the moment. So the sellers will be looking for any possible chance to add back into this position and keep this rally going. So the fact that we're meeting this final support level as resistance for the second time and getting a lot of wick rejections, telling me there's a lot of sellers still sitting here not wanting this to go higher. And obviously I'm long. So I'm kind of the minority in this at the minute. It does seem to be pushing up. This was the final sell-off yesterday. So this is where the sellers added their final rally out of there. So I'm just quite a critical level, this. Anyway, I'll keep an eye on that. DAX is rallying nicely still, but not, I mean, it's not nice. It's going up. Right, RSIs. So we've got a few 4 hours and we've got a few singles hourlies. The pound US dollar is extended on both. So we'll start off with that one. I'm not going to go through every pair today. I'm just going to basically go through the RSI extensions. I'm off on holiday next week, so I'm not here next week. I'm just going to basically be managing the portfolio, what I've got open at the moment. The EA is still running. If it takes new single positions, I don't really care because obviously it's unlikely I'm going to get into much trouble over a week. It says that as obviously the market goes crazy, but so I'm just going to be managing these. So I'm not going to go through every pair and do analysis on every pair. We know the US dollar is strong at the moment. We're waiting for news. So there's no point in looking at everything. So if there is any individual pairs you want to look at, let me know. But I'm going to cover these ones this morning and then obviously just watch what happens with the DAX. So the pound US dollar extended on the 4 hourly and the hourly. You can see this has obviously been in an uptrend. This is the weakest we've had the pound for pretty much this year. So going back to February, we've had lovely strong rallies on this. So we've just broken this support. So this was the third test support down here, previous level. And now we've broken through it. So this move here could well be a fake move. That move that we had off the US dollar was off the back of what was going on with BRICS, which isn't really going to weaken the market or power up the US dollar that much. But it was also off the back of the talk of interest rate rises and obviously potentially dropping interest rates faster than expected, which has basically thrown the market into a complete confusion. So this move isn't necessarily going to be continued strength on the US. Powell will iron this over this afternoon, and we may well get a complete push back up. We're still waiting for Bailey to give us some forward guidance on interest rates. So we're extended at the moment on the 4 hour. So you've got a lovely potential pullback available to start on that one. And on the hourly, obviously, we're extended again below the 25 level. But we're not able to get any continuation. Every time we try and rally this, it just can't get anywhere. And obviously now, over the last 48 hours, it's changed the outlook on the US temporarily. We don't know if this is going to be a complete V-shaped recovery. Happens a lot. Yeah, we see V-shaped recoveries all the time. Yeah. So there's absolutely no reason why we won't get a V-shape on this today. And then we could get a second leg rally back up into these highs, which is where I shall be getting out. So yeah, just waiting to see what happens on this one. But nice extension on the RSI if you're not already in it. US officials privately relaxed something. US officials have privately relaxed our approach to Iran oil. Bear with me 1 sec. Sorry. Oh, button. I've just protected, basically, just gone with a stop under that wick. So I've locked that in, and I've TP'd up in the middle of that propulsion. Right, so yeah, pound US dollar extended on the hourly and the 4 hourly, so nice opportunity there. 4 hour, we've got US dollar Swiss, so that's just about extended on the above the 70. It was extended, it's just come out of extension on the 70 on the hourly. The 4 hour is obviously extended to the upside. This is only just extended though, so we've come out of this massive kind of 3/4 week accumulation on this US dollar Swiss, where we were stuck between the 74 and the 24 and the 72 moving averages. Couldn't get anywhere. This high here is where I think we're headed, which is 125 ADR. When we get there, I think we're going to find resistance, which will push back. But whether or not it pushes back and manages to collapse will depend on what Powell says. But if we get to there, nice looking short opportunity. So I'd like to see this a little bit more extended on the 4 hour. On the hourly, obviously you've had your extension this morning. So if you have got into it, you've had your 5-minute reversal alert on that this morning. Yeah. So yeah, looks pretty good basically for a short. We'll be looking for a pullback on this move here. If it doesn't, and it just goes into an accumulation and rallies onto a new level, we'll be watching that monthly level for the pullback from there, which is up here. So if it just pops up there today, you've got all that move where they haven't done a profit take, so they want to do at least a 38 to 50% retracement. 50% retracement will be that high there. So it'd be a lovely support resistance bounce. So that looks pretty good. US dollar Swiss for shorts. We got the New Zealand dollar US dollar. That's a beautiful triple bottom bounce going on at the moment, off support. That looks like a good long, doesn't it? I'll have a go on that. Not on that one. On this one. Not on that one. On this one. Half an ADR, 27,270. 2R on it. So buy stop above the high of this candle. So stop down there, half an ADR, buy stop above that high. So if this reversal happens, I shall be triggered long. Look for a push up into propulsion. Might work, might not. It's triple bottom bounce. So we know this is support. We've got a propulsion gap fill, which they seem to be buying. Liquidity's gone from those lows of everybody that longed it. As good as any long you'll see today, probably. So there's New Zealand dollar, US dollar. It's just about extended on the hourly and it's ticked up already. So not a great long. Not a great long from an RSI perspective, position trading, but from a support resistance, I mean, it's a triple bottom. So it doesn't get any better than that. Pound CAD. So that's a nice looking potential long opportunity. Why am I not in that? The RSI extension wasn't extended on the RSI when I got the reversal alert. So that's one of those that's just badly timed on the reversal alert for an entry. Just came out of RSI extension when we got the alert. So it didn't trigger on the EA. To be honest, I'm not actually that worried because if you look at the wicks on this, look at the bodies on these candles. I know this is Asia, but seriously, there's absolutely no movement on this thing. Look at these wicks. This thing doesn't know where it's going. So potentially it's a good looking long. It is a good looking RSI extension. You've got a nice drop potentially to pull back on. So it's a good looking trade. Out of propulsion as well. Look. And it's tested propulsion twice. So you've got this lovely long accumulation break, retest, and we're buying. This is where we started buying after a multi-week accumulate or multi-day accumulation. So it's good looking long. We're going to need the Canadian dollar to drop. We need power to talk down the US dollar, which will bring the CAD down with it. So that's pound CAD. That's extended on the hourly. And then on the 4 hourlies, we've got pound odd extended to the downside. This is a lovely looking long. The Australian dollar is weak as hell at the moment. The pound, we've had negative CPI figures for the pound, which has brought the pound strength back a little bit over the last week. We're waiting for Powell to give us some forward guidance, but the rumours are 0.5% to 0.75% still. So we should be seeing rallies on the pound moving forward. We're just waiting for some confirmation and interest rates. So long from there. Yeah. So that looks pretty good on the 4 hourly. Not massively extended, not the best in the world, but you know, if it doesn't hold here at the 24, you're going to scale in down to the 20, down to the 72, which is what we're getting, 24, 72 bounces in a trend. And there's no reason why the trend shouldn't continue, because it is basically bullish pound and bearish Australian dollar. And euro US dollar. So this is a tricky one. We've got an unknown on the US dollar, long or short, and the euro should really be rallying still based off the interest rates and the inflation figures. We should be seeing strength in this euro. We're not getting it. Lagarde has been very tight-lipped over the last month. We've had virtually nothing come out of the ECB at all. She's talking this evening. So we may get some rally off of this. So this evening at Jackson Hole, we might get some big movements off of these, but Lagarde is not talking till 8 o'clock tonight. So like a couple of hours before the market closes. So might be a tricky one. I see Hennes, you just asked for euro US dollar. So yeah, basically it's extended. It's in a current downtrend at the moment, but I don't really have a bias on it. You know, it is just range bound at the moment. We've had a little bit of price discovery, which failed. So there's plenty more downside down to last month's low, or sorry, the previous month's low. And then we've got the month before's low down here, which is a lovely support level. So you've got these two levels here. So if it doesn't go from here, it's a scale in down to somewhere around here where you will find support on this. It's going to take something pretty catastrophic to change. I think for this to continue to drop hard out the bottom of these support levels. There's nothing fundamentally at the moment that says that this should be absolutely terrible. There's nothing that said it should be absolutely amazing either. So in that case, we will just be looking for movement of that sort of magnitude over the coming weeks. So it's just about extended. I'd much rather see it down here. But that's next week sometime, unless we get some massive news today. We'll see. So there you go. So there's all your RSIs covered. DAX still rallying. We'll do with that. Just locking in a little bit more profit. Stop from there to there. Kind of want to take this off. I don't like these wicks. Look at this wicks. Look at wiki. So we did run into a bit of a brick wall. We've broken through. That's as far as we managed to get. So the sellers were getting trodden on, or the sellers were treading on the buyers there. When the buyers finally break through that sell line, they got that far before they got another batch of sellers hit them. Yeah, this you can just see that at the moment that at any point these buyers are going to go, screw this, it ain't happening, guys, and they're going to puke. So I'm just trying to lock in as much as I can. I might move it up actually. Okay, so I'm locked in here now, straight under the low of this candle. If this candle breaks, I'm out. Too close to TP. TP is kind of pretty much bang in the middle of that candle there. So I'm not going to risk that much drop for that much reward. So Hopefully we hit that. That's 3K. And the DAX basically the same. We've got quite a bit of movement to the upside, but it's not particularly convincing. So as long as this continues to rally and doesn't give us any red candles, there's absolutely no reason to get out. But the Dow is giving us red candles. Yeah. So we can see there's a lot of sellers on board here. There's a lot less here. So just let this run. Morning, Kenzai. Can you please explain why your market sentiment different compare with my FX book? I don't know. Depends where you get your data from, I suppose. I don't think it'll be much different. In fact, it shouldn't be. No, it shouldn't be different because it's pretty much the same feed now. So it should be pretty much the same. When was it updated last? 5:57 this morning. Yeah, so it'd be pretty much the same. Pound odd. Did I cover pound odd? I've already covered pound odd, haven't I? Hopefully I did it to your satisfaction, Johannes. Could you please take a look at UJ? Yeah. So US dollar yen, I'm in short at the moment. This basically, we are unsure as to whether or not this 145 level is going to hold. So at the minute, it looks like the US dollar isn't rallying against the yen, or rather they are not selling the yen. We haven't had any warning shots from the Japanese, but since we broke this 145 level, we haven't really been very convincing in making progress. So we had a reverse alert as soon as we broke it. We've had a lower high and a lower low. We are currently sitting at a lower high. Yeah. So in theory, if this market structure is going to hold, we're going to look at a lower low next. Yeah. Down in this propulsion where my TP is. So that level there is what I would be watching to the downside, which is the 24 daily moving average. We're going to find out later whether Powell is bullish or bearish moving forward on the US dollar. That's what's going to decide whether this goes up or down. If this rallies, everything will rally against the yen. So if they start pumping the US dollar, they will start using the yen to withdraw and pump US dollar. So we will see some weakness come through in the yen. At that point, then the Japanese will step in and say, we are not happy with the way that the FX movement is going. We're not happy with the speed of the FX movement against us. If you don't stop doing it, we will intervene. The same old stuff that we get over and over again. Yen. So at the minute, it's very difficult. I'm short. I would much rather be short the yen than long, because when the yen comes down, it comes down at 500 miles an hour, i.e. when they pump the yen. So we've got Ueda talking tomorrow. Obviously, there's nothing we can do about it at the moment, but potentially, if anything is said tomorrow, we could find a very fast, aggressive move, either with or against the yen on Monday morning. So, don't know. At the moment, the US dollar looks like it's weakening, but you can see the market structure, obviously, very clear to the downside at the moment, very obvious. It's just textbook market structure. If we're going to continue this, we're going to put in a new lower low. If we're going to put a lower low, I'm out at that propulsion. So obviously we could come all the way back down into here, but we'll see. So yeah, I'm short at the moment. If you look at all the other yen pairs, they haven't made any progress. Yeah, so we have got a fairly decent strength in this yen at the moment. CAD, same thing. Swiss, same thing. Euro, yeah, coming down. Pound, coming down. Yeah, so we've got a fairly strong yen at the moment. You can see how strong the yen is. So if you look at this move we had on the US dollar yen yesterday, so this is on US dollar strength. We had a 138 pip move to the upside on 100 ADR. So this did 138% of ADR basically yesterday when other things were flying as well. So we know there's some strength in this yen. But this could all flip on a dime when Powell opens his mouth this afternoon. We will see. Morning, Steve. Daniel, so basically if interest rates rise, the US dollar gets stronger. Yeah, so basically the way that, and this is at the moment, it's not always the case. But basically the way that the FX markets are working at the moment, specifically, although it is getting, it's changing a little bit. But basically interest rates going up makes your currency more attractive to long-term overnight holds and to investment. So obviously interest it works the same with banks as it does with us. Yeah, if you put a load of money into a bank that's got high interest rates, you earn more. So when you are looking to hold currency, you hold it in the place you're going to get the better return. But obviously higher interest rates have a knock-on effect on things like businesses, unemployment and everything else. So that slows down the economy. So if you're looking from an investment perspective, GDP will tend to drop, right? Unemployment will tend to go up when interest rates go up. But you've got to keep on top of inflation, which is the main control for inflation, interest rates. So interest rates basically make currencies more strong. Inflation being high means we have to put interest rates up. So higher than expected inflation, CPI figures, PMI figures, make currencies go up when they are green and down when they are bearish, because that means we're going to put interest rates up or down accordingly. GDP doesn't have as much impact, but unemployment does. If unemployment, as with the US, New Zealand at the moment, is going up, that is a byproduct of high interest rates, which causes businesses to cut costs. The biggest cost you have is staff. Yeah. So they don't want to push this too high because it causes instability in the commercial markets and everything as well. So it's a very fine balancing act. But from a FX trader perspective, this is a key guide as to which way the market's going to go. So when you look at interest rates and what we call the differentials between interest rates, they will affect basically what happens to overall market positioning. And that's where your COT report comes in, which is the commitment of traders on the futures market, where you can see which way they are positioned. So at the moment, 77% of the market is positioned short on the Japanese yen. So they are expecting the yen to be weak. What's the Japanese yen? What's everything been doing against the yen for the last 6 months? Flying. Why? Because the market's positioned short on the yen. So if you're short on the yen, everything will go up against it. Yeah. The euro, 76% of the market has been long. The euro's been having a lovely rally for this year, because the market is positioned long on it. Why are they positioned long on it? Because the interest rates have been going up at a decent rate and their inflation has been coming down at a decent rate. It's not good. None of this is good. None of it is good at the moment. But some are better than others. Yeah. So the euro have been able to keep this a little bit more stable and coming down at a slightly better rate than the others. The more this gets out of hand, the more worry there is in the market and the less interest there is putting money into it. The US dollar at the moment, they're not interested. Their inflation has come down dramatically and fast, which is why they're saying we might need to cut interest rates quicker. And they had the highest interest rate in the world. So yes, you want to put your money in it, but they are going to pull it out. There's others like the pound, where we're saying we're going to go up to 5.75 to 6. We're much more attractive than the US dollar at the moment if you want to put long-term investment in. However, look at our inflation levels and the speed inflation's coming down. This is coming down a little bit too fast, although it is high. So if this comes down too fast, we need to drop this quicker, which means people will flood out of the pound and put it somewhere else. Yeah. So it's constantly changing, evolving market. You only need to worry about this stuff long term. If you're trading in the 5-minute, 15-minute charts, it doesn't matter what the hell this does, because the market goes up and down in the day anyway. So this is really a bird's eye view, top down. And this is what the bias scorecard is. So this gives you an overall bias for what a currency should be doing. So Aussie dollar, US dollar is the biggest sell at the moment because the Australian dollar is maxed out on its interest rates. The US dollar is potentially strong at the moment. Should be. It's not really. But the Aussie dollar, the inflation figure has just dropped dramatically quickly. The market has flipped on it. So the commitment of traders in the futures market has gone short on the Aussie dollar. They're still long on the US dollar. So that is a bias short. The retail market are longing this thing because it's coming down. So of course, what they do is they put their stops at the bottom. So the market's continually looking for liquidity. So it keeps dropping. So this just tells you basically which way you would expect the market to go over a sort of medium to long term period. So if you look at something like the Aussie dollar, US dollar, it's coming down. So it's a massive melting pot of information that you've got to try and boil down. And this is what the banks and institutions use, a scorecarding system, to give them we need to do some transactions. What should we do? Well, this is the best thing to buy at the moment. This is the best thing to sell at the moment. That's basically how they work. So they will be doing DCA moves to buy into the euro odd, waiting for it to move up. It's exactly the same as position trading. That's what we're doing. We're averaging into a position, waiting for the market movement. You don't know when it's going to be because you're not in control of it. So you use what the banks are doing to decide which way to do it, which is all what's taught in the bootcamp. DAX is starting to hit a little bit of a hurdle. So we've just taken out the low of the last 10 minutes in that propulsion, but we have added more buyers in there. So we'll see where we go. Almost break even on it. I've got a grand open. So what I'm going to do is I'm going to bank half because I'm not convinced with this the speed of this movement today, especially the speed of that sell that came in off of that high. Yeah, so that's a double top bounce. So if that double top bounce is going to hold, I'm just going to bank half, bank $500, break even the second half. If it goes and continues to go, I think what I'll do is I'll bring my TP down under that high. So look for a propulsion gap fill here somewhere. Here we go. Tony, could you also explain what it means for the bulls bears when governments sell off bonds yields? No, because I don't really look into that at all. If they need to raise capital, that's basically how they do it. It's not something I really pay much attention to be honest. So I can't really explain that one. Best thing to do is go and ask ChatGPT. He, them, they, it, her, whatever it is, will answer that question for you. I just never looked into it. Paolo, do I trade divergences? Used to. I don't really anymore. But divergences are another string to your bow, basically. So if you've got an idea for a long trade, yeah, and you see a divergence as well. So there's a divergence here. There's a short divergence here on the Aussie US. Look. So you've got market making a new high. You've got the RSI flat. That's a bearish divergence. Reversal alert short. So it's just something to add confluence, if you like. I don't trade them on their own there. Anything you trade, everything you trade, divergences, nothing wrong with them. Everybody out there that trades divergences can give me 20 examples of divergences being absolutely brilliant. And then I will turn around and go, here's another 20 where it was absolutely crap and you would have lost 3 times. Everything has a 50-50 chance. When something shows on your screen and says, trade me, the odds are 50-50. So whatever you use is up to you. I can give you the best strategy in the world where you only take 5 trades a year and it relies on 5 things lining up. You've got to have an RSI extension there. You've got to have a reverse alert. There needs to be a divergence in place at a level of previous resistance when the market has hit its ADR for the day. That is your signal to go short. What are the odds when that condition happens in the market with all those beautiful sell signals? What are the odds when you press that button of the market going up or down? It doesn't matter what you do. You cannot time an entry. An entry will be right or wrong when you press that button. And what you use is entirely up to you. If you like divergences, use divergences. If you like RSI, use RSI. If you like stochastic or MACD, use those. CCI, Bollinger Bands, moving averages, support resistance, supply demand, you name it. Every single time you press that button, the odds are the same. It's all about risk reward. Or if you're going to trade like I do as a position trader, it's all about waiting. Because I can't time the market. So if I can't time the market, I just wait for the market to be in my favor and then I exit the positions. But if you do need to time the market, you need a system and a strategy, and you've got to use something. So divergence is as good as anything else. I just, it's like everything. I've proven everything wrong. I've proven everything wrong. No one's ever given me anything that they've proven as works. I can always prove it wrong. And divergence is no different. I did a course on divergences with a Russian guy years ago, and it was fantastic. And then it all started unraveling because divergences don't work in certain market conditions, because nothing works in all market conditions. If it did, we'd all be millionaires, wouldn't we? So there's nothing wrong with them. Is there a proper way to sort out the validity of market expected sentiment, especially if one wants to avoid negative drawdown due to speculative or insider trading? No. Sam, you're trading a random instrument that moves up and down at random based on 10 banks moving it. Not 5. Whether they're insider trading or not, or whether it's speculative trading or commercial trading, whether it's hedging or what it is, there's absolutely nothing you can do about it, and there's no way you can forecast it. Yeah. If there's an insider trading going on tomorrow, what are you going to do about it? Not trade in case there's insider trading tomorrow? So what are you going to do? Well, it's Saturday tomorrow, but Monday. So, and then on Monday, just in case there's insider trading on Tuesday, what are you going to do? Not trade? Then not trade, basically, just in case. Just get into the market. Wait. If there is insider trading that goes your way, happy days. If there's insider trading that goes your way, wait, enter another position, move your entry, and get out later. It's all the same stuff. Doesn't matter. How this market moves, why it moves, is desirable to understand because you can see more information on the chart. You still have, at that support level that I can see here, and this propulsion gap that I can see here that has held up once, the odds of this propulsion gap holding now are that. It's either going to hold or it's not. The decision as to whether this holds or doesn't is nothing I can do at all. It's down to the banks and institutions whether they decide to buy from this propulsion gap or whether the buyers that have bought from this propulsion gap clearly here have got enough power to overwhelm the sellers. That's what's going to make this thing go up and down. Why doesn't matter. The why, if this goes up, could be that Microsoft phoned up Barclays and said, we just opening a new office in Australia. Can you convert 20 billion US dollar into Australian dollars for me, please? And Barclays go, yes, no problem at all. It could be that they phone up and go, we're shutting our Australian branch. Could you convert all our Australian bank balance into US dollars, please? Yeah. Because that thing hit that has got nothing to do with the next direction of that price. So if you start worrying about that sort of stuff, you'll never take a trade. This is why position trading works, why I do it, because I have no clue whether this is going up or down. I can show you what I have seen in the past over 15 years happening over and over again. Whether it happens today, I don't know. The pound US dollar I've been in now for 3 weeks, 4 weeks. When did I get into this? 19th of July. We're on the 25th of August. 5 weeks I've been in this long. Still in it. I'm wrong, really wrong. But what I do know is if it moves up by 2 ADR, I'm out. How it gets there, I don't know. If it moves down, then I'll keep scaling out of it and wait until it goes up, and then I'll get out. But why is irrelevant, isn't it? I can look at areas that I think it's going to bounce at here. And what did it do? It bounced. But did it bounce far enough for me? No. That was a shame. It could well bounce down here. It could bounce at that high there, could bounce at that level there, which is a lovely support resistance, which is exactly where we are now. This could be the point that it moves back up and fills these propulsion gaps. All could be. Nobody knows. So just get in and wait. I'm waiting for this to go up. If it doesn't go up, I'll just carry on waiting. And I can wait for 6 or 8 weeks. Yeah, look at my drawdown on it. 1.3% in drawdown. I've been in it for 5 weeks. Wrong. Nothing I can do about it. But wait. Can position trading strategies be used in stock market? I don't personally know. The problem with stocks is specifically with indices. 2, 3, 4. Is they tend to trend more. So you can position trade them, but stock indices are manufactured to go long. Yeah. Well, that didn't move. So your stock indices are manufactured to increase because they're revolving around basically the price of a company, the valuation of a company. The company valuations don't go down. If company valuations go down, shareholders get fired, shareholders lose money, and what do they do when they're not making money? They sell those stocks. So businesses are manufactured to report profits quarterly to be profitable. Yeah. So you've got a lot of businesses out there that could make an awful lot more money. But if they make too much money too fast, it overvalues their share price. Yeah. So stock indices that measure these companies are manufactured to go higher. If you look at the S&P, I can only go back here until 2012. The S&P was trading at 1283. Yeah. And it's gone up. And then it hit a bit of a blip around about 2000. And then it went up again. Then it went up again. Then it went up again. Then we had COVID. Then it went up again. Yeah. And it's in a bear, volatile market now, which we're coming out of. What do you think it's going to do next? It's going to go up again. So if you're position trading short here, you're dead. Yeah. So that's the reason I don't. I do have a set file for the market reversal alert CA that is a long only set file for the S&P, which is what I use as a kind of a pension fund. You literally buy the dips. So when you get an RSI extension on the 4-hour time frame, you buy it and you wait. And if it goes down, you buy it again and you buy it again. You just keep buying it because that's what happens. When you get a bubble pop, like the housing, the banking, or the IT bubble, or a COVID correction because we had COVID happen and then the market rallied while all these businesses were shut and not making money. Obviously, we needed to sort that out because it was all inflated artificially. You don't trade it. So you have to be able to identify when the market is going to go into a bear volatile condition, which is what this is. But you look, exclude COVID, right? Take that out of the equation and the recovery from COVID. This is what actually happened. Yeah. Then we have a bear volatile. But look at the size of this bear volatile move. We've not had that before. That's new because of COVID. What we normally get is a bubble pop, 2018. Yeah. And then you get another one down here. But it's designed to go up. So every now and again, you get a dip below the 200 MA. That's when you know you're in trouble. If you're above the 200 MA, you just keep buying this thing until it gets below the 200. Then you get out with a loss. So when I was trading this in 2022, that is where I exited. If you go back and watch the live room back in December 2021, rather, you will hear me talk about this. I've turned off the EA. I'm getting out at the moment because this doesn't seem right. First alarm bell was we didn't get the Santa rally. Yeah, run up to Christmas, the first 2 weeks before Christmas, we get a rally in the stock market, always. We didn't get it. So it's like, that's weird. Why are we not getting the Santa rally? And then all of a sudden we got this, what the hell was that at Christmas? And that's where everybody went, hang on a minute, something's not right. The volatility picked up, but that's not normal. This is an abnormal market we've just been through that we've not experienced. We've had it for a year and it's probably over, but it's still not quite recovering as fast as it should do. So you can't tell. You can't tell what's going to happen. But that's why I don't position trade stock indices or stock market. If you're going to trade individual stocks as well, they gap a lot. They move around and jump around all over the place. So if you're position trading, you're going to need to hold overnight. If you're going to hold overnight, you're going to get gapped. If you get gapped big style, you're going to get massively hurt. If something has bad earnings and gaps down and then drops for 3 weeks, you're dead. It's just not the right instrument. FX is manipulated by the banks over and over again for commercial means to make money and by their clients on the corporate desks. So we know this thing is going to get manipulated up and down. And when they've rallied something, they need to undo the rally to make the money on it. With the stock market, if Apple come out with a brand new phone that's cutting edge, nobody else has got, and they've got a patent on it for 25 years that no one actually can manufacture anything like it, Apple shares are going to go through the roof. If you've got a short on it, you're never getting out. Yeah, doesn't happen in the FX market. Okay. That's why it's not really the right vehicle. The H1M5, you took a 0.1 risk per trade. Then as a percentage of your account, how much do you look to be up before closing? I don't. I get out when I feel like it. When it looks good, basically. Give me 1 sec. Sorry, 1 minute. So I was talking about completely. Oh yeah, 1% risk per trade. So basically, getting out, you can see when I get out. So when I'm in profit at the end of the day. So there's no right or wrong. In the bootcamp, I teach to get out at a level. So let's take this pound New Zealand for example. So this was the first entry here on the H1 RSI extension. My target was here. Right. So in the bootcamp, I teach to go for a target of 1 ADR or half an ADR or 3/4 of an ADR or something, basically something that's achievable. We know that 58% of the time the market spends its life within its average daily range, right? So if you target something within inside the average daily range, there's a 58% chance you're going to hit it. Logic. So if I get into a short, and that is 3/4 of an ADR, that high, this propulsion gap, where we know that the target, where the market is drawn towards propulsion gaps, it's drawn towards support resistance zones. That's an obvious target. After this pushes against me and I take a second position, the average of these two positions will be here. So I will look at an exit below that. So maybe these lows would be a good spot to get out, this propulsion gap. That's still valid. It could also come all the way back down to there. So when the market gets down to this level, I will go, what's my week been like? What's my day been like? Is that enough money? Do I fancy getting out? Does that look good? Does it look like it's going to bounce? Have we got news coming up? There's 1,000 things go through my brain. But at the end of the day, you take it off when you've got a profit. That profit is entirely up to you. The longer you hold it, the more difficult it's going to be to achieve the target. Yeah. So in this case, we got one position on, two positions on, we took a third, and it still hadn't come down. We had this lovely propulsion gap out of this accumulation. So that was the target. Entry 1, entry 2, entry 3, average about there. That was target. It pushed up further, took another position. And this is where I had an average of around there. So this propulsion gap was an obvious target. Yeah, it actually got down to this one. So I got out here because we slammed into that propulsion gap and we didn't stop. We pushed on through it. So I took it off there because I was worried about this low. So we had a high, tested, tested, test was expected and a potential rally. So I took it off there. So your target is where you think price is going to go to. Price, and this is why I have the support resistance propulsion indicator out there, because price moves from and to support resistance areas, yeah, and between propulsion gaps, which are bank orders. So if it's going to go long, I would look at that and that as a target. If it's going to go short, if this breaks, I would look at that as a target. That's a tiny little propulsion gap. So you could use that as a target if you wanted to. And it's also ADR. Depends how much profit you got when you get there, doesn't it? But there is no set target. It's where you think price is going to go, because the market will give you what it's able to give you. If there is, let's look at the pound US dollar, right? So let's go back in time to here. Okay. So you're short on this, right? So you've got a short entry here, for example. You went short, it pushed down, didn't quite get to where you thought it was going to be, a target down there. It pushed up, you added a second position, your entry was there. If this thing's coming down, where do you think an ideal target would be for you? Previous low. So that's where you would get out, right? So let's say now you take a long here because of that double bottom bounce. Where do you think would be a good place to get out? Up there, yeah? Don't get out because it's half an ADR or 3/4 of an ADR. Get out where you think price is going. You're right or wrong. I'm right or wrong. I have no idea where price is going. Neither do you. So you get out where you think it's going to go. The reason I've got all the TPs for all of these positions at the moment are all sitting at that level should be pretty obvious. Yeah. Market pushed down, bounced, pushed down, bounced, broke it, used it as resistance multiple times, and now has broken down. If it's going to break back up again, we know damn well this thing is not going through that level. So I'm not going to go for a target up here, although I think these are obviously achievable at some time in the future. I'm getting out there because that's a massive profit. In reality, if this thing gets to 175 ADR today, I'm out. I'm not going to wait for it to get there if we've hit 175 ADR in a day. Because what happens when we get to 175 ADR in a day? It's knackered. It's going to pull back, isn't it? So the likelihood is it's going to pull back. And it could go down there. I don't know. But as soon as it gets into profit, I will be watching where we are, where we're getting to, looking for signs of price action to get out of the position. But there's never a right or wrong. But if you want to use something, 3/4 of an ADR is a really good target. Yeah. Or 1/4% on your account. Yeah. So if you've got a 10 grand account, go for 1/4% or 0.5% of the account. Yeah. I mean, I look at my P&L and, you know, if something is sitting here, let's say, for example, euro yen today, let's say that gets up to $250, which is basically 1/4%. So you can see my target there, look, is $330, right? So that is targeting that propulsion gap. Yeah, so I'm long at the moment from here. If it gets to that propulsion gap, that's $330. That's a 50% retracement on that down move, because we are in bearish market structure. So I'm going to assume they're going to do a 50% retracement and drop. I have no idea what they're going to do, but I'm going to assume that they're going to do a 50%, right? A 50% is that propulsion gap, and it's $330. If at 5 o'clock this afternoon, this thing hits ADR and puts in a bearish wick, I'm out. And I don't care what the money is. I'm out because it's really close. It's 5 o'clock on a Friday afternoon, and it's put a bearish wick in at ADR. And there was an accumulation there twice. So we know that there's a big amount of buyers and sellers in that location. That's why I'm getting out. I'm not getting out because that propulsion gap's there and that's 100% in stone. I'm getting out because I've made $250 on a Friday afternoon and I can't be asked. That's the mentality you've got to have. Loose. Small positions, loose, and not care. I don't care. If I make 0.25% or 0.5%, if I make 1% because it flies ridiculously, I can't because I've got TP, but if it flew ridiculously, do that. No rights or wrongs in trading. You have to use some discretion because the market is not mechanical enough to do the same thing over and over again. It never does. This is why backtesting is useless. It's not useless. It's good for proving strategy and proving long-term edge. But there is no, if you try and optimize a set file to go, right, this is the set file, it's not the set file. It's the set file that worked over the period of time you test it. That is never going to happen again. You go and show me 10 charts, you will never, ever find the same price action over a period of a year happen again over another year. Go back 100 years. You will never, ever find the same price action. It's unique every day. So whatever you backtest is never going to happen again. Distance of movement does, which is why we use ADR, because we know that things move within an average daily range, and the average daily range changes with the instrument's volatility, which changes with the fundamentals in the market. But you've got to be flexible. We know propulsion gaps get hit. Market is attracted to them. We also know propulsion gaps get orphaned, and the market leaves them behind. So if I'm going to target something, I'm going to target something that, first of all, the market can achieve, which is 100 to 125 ADR, at a propulsion gap that we know it gets attracted to. That takes my position into profit. I could target that one, and it could hit that one. But if I'm happy with my money there, I'll take it. You could, if you wanted to, let's say, for example, it gets to ADR, you could put a break-even stop on it. But then what's probably going to happen? It's going to do that. And you're going to go, hey, it hit my target. I just wasn't on board because you've used a stop loss. And what does a stop do? Stop profit. So, yeah, does that clarify? I can't be any clearer than that because there is no clear. It's discretionary. Golden rule, get in and wait. Exactly. Which method of trading is best for prop firm? The one that works? Can't answer that, Mick. There is no such thing as a best method of trading for prop. It's whatever you can make work in prop. And that won't work all the time. Trust me. I know. I trade prop. I lose accounts all the time. This week, right? Let's look at this week. This week in prop. So this week on prop, trading ORBs, $24,496. This week in prop. What's next week in prop? No idea. Could be a $2,000 loss, could be a $5,000 loss, could be a $12,000 loss, could be another $20,000 week. I've no clue. But your week is whatever your strategy gives you. So if you are, there goes, oh yeah, I took that profit off, didn't I? So yeah. So if your strategy works this week, you'll make money this week. If it doesn't work this week, you won't make money this week. It's not down to you whether a strategy works or not. It's down to the market movement. The market movement is out of your control. So you can pick whatever strategy you like, but it will have good weeks and bad weeks. The best strategies for prop, in my opinion, are the high risk, high reward strategies like ORB, because in prop, you're going to blow your account at some point. So would you not rather milk it as fast as you can and then blow it, rather than wait 6 weeks to 8 weeks to pass an evaluation, to move on to stage 2, to pass it again in 4 to 6 weeks, for then your strategy to fail in month 3 when you get funded, and you'll have wasted 3 months of your life on a strategy that eventually hit its stagnation period, which is what they all know happens, which is why they do evaluations, and then you lose the amount that you've wasted on the evaluation plus 3 months of your life. You're better off going in hard, fast, and trying to milk it. Because strategies will work for a week and fail for a week. You just don't know which week it is. So this week, if you'd have used the ORB strategies, you'd have passed prop twice and have drawn 10 grand out your funded account. I'll tell you what's going to happen next week because that's a different week. I'm not here. I'm going to be on a beach. Paolo, silly question. I'm finding it hard to distinguish futures and indices. Just forget futures. Google all this stuff. If you want to know all this stuff, go and Google it. Indices and it's the same thing, basically. A stock index is either a cash index or a futures index. A cash index is a kind of a CFD, a contract for difference version of a futures market. Different prices, same price action. Don't worry about it. Just trade what your broker gives you. The thing to do. On the set file it's 1.5 ADR to close all positions in profit. Yeah, so the set file that I use is 1.5 ADR, but it very rarely ever gets to 1.5 ADR because I close it out before that. That 1.5 ADR profit is there for when I'm not around and there's a news event. Yeah. So if I'm not around and the market spikes by 1.5 ADR, the EA will get me out of the trade in profit because I might miss it. Other than that, it will usually hit my TP before that. Look at this. I mean, this long that I've got on, and that's ORB. So look at this one. Yeah. So 1.5 ADR is 150 pips, which is there. Obviously, it's 1.5 ADR. Of course it is. It's one. Why don't you use the indicator, Lee, that you created to measure ADR? That's 150 ADR. So my TP is there. So even if this thing pushes to 150 ADR, I'm out before the EA. If I had forgotten to put, so let's say, for example, this is a brand new trade taken this morning. I'm not around today. I don't put this TP on manually, and this thing moves 1.5 ADR. The EA will get me out of the trade up there. So it's only there as a fallback for me, basically. Morning, Amar. Which prop firm do you use for the ORB? Probably you said 1,000 times. Yeah, my Forex funds or E8. If you go onto the website and go to trader funding, there's a comparison there on the website. I use my Forex funds and I use E8. I haven't used E8 for a while, to be honest. The main reason I stick with my Forex funds is because you get a discount on failed evaluations. So these guys are more expensive than E8. You can't see because my head's in the way, but these guys, E8, are more expensive than my Forex funds. And I get a discount with my Forex funds. So when you fail an account, when you buy a new account, you get a 10% discount. So there's because these guys are cheaper than these guys in the first place, and they give you a discount, there's just no reason not to use them for me. So you get a lower payout by 5%, but it doesn't matter. It's very, very little difference. Yeah, so that's who I use, but just use anyway. I mean, there's a comparison table here, which gives you all the information about them, so you can compare them and choose based on all sorts of conditions. So go and have a look yourself. But speaking of prop firms, I'm using the hedging H1 set file for my Forex funds challenge with low risk. Speaking of that, I was just going to check the VPS, wasn't I? I forgot about that. So I was just going to go through the set files just to see what they've done this month. So this is the ADR set file. So this obviously takes trades when we hit ADR. Takes the 5-minute reverse alert at ADR. 6.68% this month with sitting in 3% drawdown at the moment. Nothing particularly worrying in there. This is H1. This is the account I'm using in the live room. 6%, as we know. Tough this month. This is the hedging set file. So this is the one that Mr. Lunis is talking about. This is the H1 hedging set file. This has done 10% this month. This has always got this drawdown. So if you are using normal risk, you will always be in high drawdown on this because you're hedging, meaning you're in both directions most of the time. You're always going to have a high drawdown because you're always going to be wrong on something. So it's just a case of waiting. This is I don't like it personally, but it's so profitable, like stupidly profitable. 45 grand it's done in the last June, July, August, 3 months. 45 grand it's done in 3 months on 100k, 45% return. But you're going to go into drawdown. So this is one for your personal accounts, really, rather than prop. You're going to experience high drawdown, but you're going to get high return. So it's just too risky for me. It's too much. I can't sit in that. It drives me out the wall. And H4 M5 mean reversion or H4 M15 mean reversion, there's very little in it. 6% this month, pretty much flat, 0.25 drawdown. So yeah. So that 15, 16, 22, 28, 20, 28, 30% across all 4 strategies this month so far. Obviously, we've got another few days next week, but I'm not here. So yeah, good move. Everything's worked as usual, but we've had some higher than normal drawdowns and we've had some longer than normal stagnation periods this month. That's trading. It's never the same every month. Not sure if I did something wrong, but tested H1 hedging and it performs lower than H1 M5 over 2020, 2021, 2022. I don't know. Depends what test conditions you're using, and there's a lot that goes into it. So, you know, the thing is, you've got to get, when you're back testing something, you've got to get out of your head, I'm looking for a profitable set file. Yeah. You're looking for something that has robustness when you're back testing. The whole purpose of back testing is to find robustness in a strategy, not to find a set file that is spot on, because that set file is not going to perform the same. So what you've just said there didn't perform as well over 2021, 2022, and 2020 as the H1 M5 set file did. Which of the 25 million combinations of settings did you use? Because unless you tested all 25 million combinations of settings, you haven't done a robustness test. You've just tested one condition. You've got to test multiple variations of a strategy to see if it's robust, because you're not going to take the same trades. You're not going to get the same trades. You're not going to get the same slippage or spread, and you're not going to exit in the same positions as that EA did in that test, because you're a human being watching your P&L. And when your P&L gets to a certain amount, you will react. Don't care what anybody says. Nobody sits there and puts an EA on a chart and ignores it. They will look at what's going on in their account. So right now, I'm sitting here going on holiday thinking, I'm closing this today if it's in profit. Same with that, and same with that. Because I want to get as flat as I possibly can so I don't have to worry about this thing next week. Yeah, the EA is not going to be doing that because it doesn't know when I'm going on holiday. And in my back tests, I wasn't going on holiday. So I'm going to get totally different results to that back test. But the robustness strategy, the robustness testing, system parameter permutation testing, will show you how robust the strategy is long-term on all the variations that you try. So if you test something with a target of half an ADR, 0.75 ADR, and 1 ADR over a period of a year, and all 3 of those come out as profitable, that is robust. If you test the distance between trades as half an ADR, 0.75, and 1, and they all come out as profitable, that's robust. If you test all combinations of those, 3 times 3, and all of those come out as robust, as profitable, it's robust. Basically, it doesn't matter where you scale in, and it doesn't matter where you get out. They're all going to work. That's what you need to do in a back test. Prove strategy robustness, and then you forward test. That's what you do. And obviously, you've got to do this on all pairs, yeah? So when you look at this, for example, look at what I do in here on a daily basis with the opening range breakout strategy. Look at what I've done this morning, yeah? I closed that at $500 because I wasn't convinced with this price action this morning. I did that. Now, I've banked 500 there. I'm sitting in 893 of profit now, and I'm looking at this thinking this price action's slow as you like today, so I'm going to take these 3 candles and change that trailing stop there to 180 because I'm not convinced about this price action. So I'm going to guarantee $1,000 in profit this morning. When this market opens this afternoon on these US indices, that comes into the equation as to what I do with these. Right? An EA backtest on this instrument, that's a lovely little poplar, does not take that into account. So when this thing opens this afternoon and the Dow pops up 1,000, the NASDAQ goes into a hedge and the S&P 500 pops up 500, what I can do is go, right, screw this, that pays for that. I'm going to put that on top of that and walk away with 1,500 today. I am going to do that. The EA's job is to execute the strategy. And yes, you can backtest over a period of time and get exactly what would have happened. But this is the real world. That is not the real world. Yeah. You've got to be able to watch. You've got to be able to understand what's going on in here as well. You can't just pop an EA in a chart, pick a set file and expect to make a fortune. You can, and I've proved it. That VPS that we're looking at there, I haven't touched any of that all month. It's all made loads of money. I haven't touched it. However, if I had have touched it, I probably would have made more. So, you know, you've got to be a human being as well. Did you have to intervene on the hedging VPS? No, I haven't touched the hedging VPS. No, that's not touched. I haven't touched that at all. That 45 grand or whatever it's done, I haven't literally have not touched it. They're all running as a totally independent on their own. This is what I mean. You know, if I had have intervened with that hedging set file, I would have made more money out of it, and I probably would have been able to control the drawdown better. But then again, I might have cocked it up. I don't know. But this is why you keep your risk small. Yeah, if you're going to let an EA run riot on your account, keep that risk small because you know, people constantly get in touch with me on Telegram. I've put this on the chart. It doesn't take any trades. Can it do this? Like, the first thing I say is, have you read the manual? And you'll see me always in Telegram if you go into Telegram. Have you read the manual? No. Right. So you've put something you've bought off of a website onto an account with real money, not having a bloody clue what it does or what any of those settings do. You've picked a set file that somebody said worked. You've chucked it on your account. You've pressed start and you don't know what's going on. Really? I don't even know what to equate that to. It's kind of like drawing £1,000 out your bank and walking along with it in your hands like that, looking around and seeing if somebody's going to nick it. You've got to know what you're doing, basically. Even if it's an EA, you still need to know what's the edge of the strategy? How does the strategy operate? What can I control in this strategy? Would I be comfortable with this? Do I want this to work this way? Or should I be thinking, I don't like the way that works? You know, this is what you've got to do. This is not a get-rich-quick industry. As much as it's painted to be, you've got to be able to understand what things are doing. So, you know, and this is the thing with these set files that I provide, they are starter set files to get you going so that you can see what it does. So I provide set files for the opening range breakout, for pre-market breaks, for post-market breaks, for different times of breaks, for different TPs and stop loss variations. You know, so it's just to give you an idea. You know, this is how the strategy works. This is what it's capable of. Which one's going to work every day? Nobody knows, because if we knew that, we'd all be billionaires. We're not. I don't know. I didn't know this was going to break long today. I went with the edge. I broke long because the market went long. I'm making money because the market's gone long. If the market had broken long and gone short, I wouldn't be making money. Who's controlling that? The banks. I've got an edge, which I've back tested rigorously over multiple conditions, multiple pairs over different time periods. And that's what I found, that there's an edge in doing this. Which days are going to work or not, I don't know, do I? You've got to be sitting there watching it. I use a hedge with lowered risk on my private account, maximum drawdown 15%, 7.65% profit this month. Brilliant, Amy. You see, and this is the other thing, you know, everybody's after this positive risk reward, and Amy's just kind of proved it there. 15% drawdown, 7.65% profit. Yeah. Your account is there to be drawn down into. That's its job, right? Its job is to use your money to put risk in the market to make you a profit. This doesn't have to be lower than this. There's this conception in the market that if you're going to make 15% a month, you can't have more than 10% or 5% of drawdown. Otherwise, you're not making as much as you're risking. Who came up with that? I know the prop firms enforce this, but who came up with that? There's not a bank, institution, or hedge fund on this planet that does not go into more drawdown than they make. A typical hedge fund, pension fund that invests in hedges will go up to 45% drawdown on its pension fund to make money on market swings. This is what the institutions are doing. For some reason, we're told that we're not allowed to go into this amount of drawdown to make this amount of money. Who said that? All the courses that teach you to use a stop loss, which guarantees you to lose money in the market. That's who said it, isn't it, basically? But Amy's prime example there, yeah? I'm sitting in 22% of drawdown right now on that VPS, on that H1 hedging file, having made 45% return in 3 months. It's in 22% of drawdown. Right now, I could shut that VPS down, walk away with a 22% loss and still come out with 20% on the quarter. Why does somebody say you can't be in drawdown by X% on your account to make money? It's rubbish. Look at my account here. This is another great example, isn't it? That's not the right, different account. 6%. I'm sitting in 3% of drawdown. So everyone's going, well, you've only made 3% this month. No, I've made 6% this month. This is working capital. I've got 100% of this to use to make money with. I'm in 3% of it at the moment. Who says I can't use this to 22% to make this? I want to make money. I don't care what that does. I just make sure I don't blow it. You don't use risk high enough to blow it. That's all it is. So drawdown, everyone's focused on, no, it's too much drawdown. No, too much drawdown. Why? 100% is too much drawdown. Anything under 100% is just drawdown. That's working capital. That's what you're using to make money out of this market. Switch your mindset, as Amy has clearly done. Mr. Lunacy, which pairs are you using here? Excuse me. And you haven't had to do any DD control this. Well, yeah, that's good. August was good for the H1 hedge. Although August, you know, in my account, August was good. Well, it's all right. It's 10%, but it's gone into 25% of drawdown, hasn't it? We looked at it the other day, didn't we? I think it was in 28% or something. But I mean, I've watched this thing for many months. It doesn't get above 30%, 35%. It's always in 10 to 35%. That's where it lives, because it's hedging. So it's always living in that area. This is why I don't like it personally, because I can make money without having to do that. But reliable. Stressless kind of trading, low risk, yeah. Morning XR8, news. I can't see your name today. Right, I'm going to leave it there this morning. It's just the bank texting me my weekly balance. I love Fridays. The bank tells you how much money you've got or not, depending on which week it is. But yeah. So I'll leave it there. I'm just going to monitor this today. I don't think we're going to get much movement today off of anything, really, by the looks of things. Out of the DAX. There we go. So stopped out in the DAX, second part, 1,300. So we did get that to our target. So if I hadn't have put that trailer on, we would have hit the target and we would still be in our runner. but that's the decision I made. So out of the DAX, decent break again today. That's 5 in a row. So that's 5 for 5 this week. Decent week. So I'm just going to watch this today and see where we go as usual. We've got the business climate has come out as a slight negative for the euro. Just quickly see what's gone on with the euro, if anything. Doesn't tend to do an awful lot of business climate. So so that's dropped. We've got Michigan at 3. So there's no news until I come back on at 2:20. And obviously for the US market this afternoon, these are the big movers this afternoon. Powell and Lagarde later on this evening, possibly Harker. The market seems to be spending a lot of time listening to Harker at the minute. So we'll see where we go today. I'm not expecting a big day today. CPI's just dropped on the yen. I didn't spot that. Not really a reaction, is it? Inflation, the interest rates in the yen have been negative 0.1% for 6 years. So the CPI figure for the yen doesn't, this is why it's orange news, it doesn't really affect the market because they don't change their interest rates. They leave them as a negative. They don't use it for controlling CPI. So I don't think, it's obviously not had any reaction to it, and it is coming down, which is good. So, but yeah, there's no other news today. So we're waiting for the talking heads. So this afternoon is going to be a tricky afternoon, potentially. How's that doing? That New Zealand dollar US is not doing anything, is it, at the moment? So it's going to be a tricky afternoon. We may well hang around for half an hour and have no movement because we're waiting for Powell to talk. We may get an initial flush as they get prepared for Powell talking. We never know which it's going to be, obviously. So just be careful if you're taking the pre-markets today, this afternoon rather, because we might get whipsawed. So if they're really tight ranges, I'd probably skip them today and go with the 5-minute opening ranges. But even the 5-minute ORBs, we've got 6 candles after that open, potentially to go sideways until Powell opens his mouth. So we will see. But yeah, so there's no other news this morning, so just be prepared for all of that this afternoon, okay? So that's really all I've got for today. When I become a millionaire from trading, I'm going to buy me you're going to buy me a Rolex. Thank you. That'd be very nice. I haven't become a millionaire from trading yet. So if you do, well done. You're doing better than me. But then again, if I had a load of money to start with, I would be a millionaire now because you make a percentage on your account. So if somebody had given me 5 million to trade with, I'd definitely be a millionaire. Somebody didn't, unfortunately. I'll leave it there. Anything you need, let me know. I'll be in Telegram. And obviously, remember, there's no live rooms next week. So no live rooms next week at all. I'm off and I'm back week after. So if you're not here this afternoon, I will see you in a week. If you are here this afternoon, I'll see you this afternoon. But have a good one.